Hello everyone, Jesse Webb, Traders Pro. Market conditions are still pretty deeply oversold. If we look at the direction alerts, we're bearish in a bull market. This bull market is definitely pausing right here. We're starting to see this upper range starting to flatten out and starting to roll back down a little bit here. And in the shorter term, we're sitting right at some pretty significant support areas. And so we need to see where those support areas are, if there's some ranges for a bounce right here. Sentiment and momentum, we're back in that downtrend location and bouncing off some support. We had a pretty aggressive sell day on Thursday, and then Friday it kind of paused a little bit, but definitely in the lower half of our momentum range and bouncing off of those extreme locations. So now we're back up in a range where we could definitely see a reversal back down again. We could bump back up and retest this upper range. Could be an interesting couple of days here. Breadth is holding about the same, relatively weak, 32.4. Which means that only really 30% of stocks are trending higher in this uptrend, and which means that 70% are trending lower. That's bearish breadth, and it's going to be a little bit tougher for the market to push through that. The buy-sell ratio also is confirming that, where we're still relatively wide. We've got a buy-sell ratio sitting at 0.16. That is pretty wide in terms of some of the historical ranges, 0.14, 0.20, 0.11, and this last one, 0.12, 0.06, and 0.07. That's really when it gets the widest right here, is that point. You can see 0.05, 0.06. So we have some range to the downside. We're at 0.16, and we're working on this first little move back down, whether we get another push higher and then we end up getting a retracement back lower. We'll see which one comes first, but this is an area of certainly it's bearish right now in these conditions, and I wouldn't get overly excited about jumping back in the market at these levels. If we take a look at some other things, some additional confirmation regarding breadth, the Dow Industrials, 4 stocks, buy-sell ratio at 33. So a handful stuck in this trendless rating. It's this hold signal, and we also have a bunch in the sell signal. Of the 4 stocks, it was actually interesting. IBM is the best looking chart of the bunch. It's had this uptrend. This is the last 6-month time frame. The 1-year chart is actually looking pretty decent right here. Some support area here, pretty smooth uptrends, and had a pretty nice rally, that 1%, and almost breaking out of resistance areas. So for whatever reason, IBM is starting to take charge right here, which is an interesting chart pattern. Some of these others, actually Visa looked pretty good too. We'll take a look at that 6-month chart. Cisco actually also looks pretty good. Towards the upper end of that range, had a little retracement bar, and it certainly could have some volatility inside that upper momentum zone, and could continue to the upside, potentially with a retracement back down to 53. So if you're looking at building out the watch list, these are some to consider, and also Visa, at least in terms of Dow stocks. That's really what you want the stock to look like, is you want it to be moving in this direction. You want it to be in this upper range of the chart pattern with this fib tool connected to this upper area and a support area around this first support zone, which is a 236 retracement of the high, and Visa also looking good right here. Merck, not so much. I mean, it's had a decent retracement, but it's got some significant amount of work to do for it to continue that upside, but it is in that buy zone. If I switch back over, you can see it's had some volatility here, and then we looked at Cisco. So those are really the 4 stocks in the Dow that are continuing to perform, and we'll see if they continue to do so. If we look also at some current ETFs, well, just remember that this overall ratio, we're just heavily to the downside, and that is the bias now. It's starting to shift towards that bearish downside. We have some support areas that we need to be aware of, though. Let's look at SPY, and this 429, we still have yet to reach it. We had this pretty ugly bearish day, this really engulfing pattern right here where it gapped higher and then closed all the way lower, right at this resistance area too. And then we had the Fed minutes, I think it was, or Powell did something, some kind of update where he's turning a little bit more hawkish. That's ultimately what the market wants to see, is for the Fed to kind of go neutral and then ultimately go into a tightening phase where they're actually either not raising rates, or they're starting to lower rates, or they're starting to hint at lowering rates. And the market will ultimately like that. I think that's why we got this little bounce on Friday. Whether or not it ultimately holds is yet to be seen. And if we get a bounce from here, this 429 on SPY really is a strong support area. And if we can't break back up, now we've got a decent amount of resistance sitting at this area, including that selling happening on that engulfing pattern. And we're inside of this zone right here. So it's certainly a downtrend currently in this shorter term, and areas to be cautious. What does that mean ultimately? As I've mentioned before in some of the updates, ultimately the market direction is controlling your entry and your position size. How many, if any, new positions are you adding, or are you cleaning out the portfolio? Do you have any losers in there that you want to get rid of? Do you have to tighten up some stop losses potentially on your winners? Are you looking for some potentially aggressive bearish type trades to the downside, like using put options or inverse ETFs? Okay, let's take a look at some of those. The muscle ETFs, the current group right here, some of the leaders. Sugarcane, might as well cover it. It's got a new uptrend and it's looking pretty. It's had a pretty huge run here in the last since April. Now, when we're talking inflation, this is always an interesting one when we're looking at commodities and whether or not some of this is going to spill over into increased cost of goods. This is at the commodity level. So interesting. That actually popped up in the scan the other day as well. And then we're also looking at these are some of the major trends happening currently, and that is big banks to the downside. This is a negative ETF, a 3x negative ETF, which means it goes up by 3% if the banking sector drops by 1%. Okay, so it's an inverse, and we've seen it bounce as banks have been dropping. Some of these ETFs you could utilize, especially these inverse ETFs, if you don't want to buy puts or you don't want to short stocks, but you want to create some hedging for some downside, then consider using an inverse ETF, whether it's a full market ETF that is against the entire market, even like I thought I saw Russell 2000. In fact, that was in the new buy list. Was it there? Was it where did I see that? Oh, here's a small cap. So short Russell 2000. Small cap bear, TZA. This has been a pretty popular one that's been around for a while. And so you can see that we're just small cap, we're retracing, and this is just the exact opposite of if you were looking at a chart of it going higher, if small caps going higher, this is going lower against that. Now the 3X may be too much volatility for you. I believe there are 1-to-1 ratio ETFs as well by those same companies. So some interesting price activity happening on ETFs, and let's take a look at a couple others because these are some interesting trends just to be paying attention to. Real estate, this real estate bear, these are some of the top ones. So real estate in a downtrend, ultra short utilities, consumer goods, the treasury bear. This means that as treasuries are going down, then this is going to go up. So it's a way to be able to trade downtrending interest rates. Although we've seen this move right here, we saw a little pop of interest rates dropping just a little bit and bond yields going higher. Again, this is the opposite of that. So it's pulling back, but still in this trending zone for you to consider. Let's look at some quick muscle stocks here on the day. We've got SPNT, which has got a nice, good, solid confirmation bar. And let me just jump back over into this new buy list. SPNT, EOSE up 13%, an energy stock. working its way higher. It's still in this downtrend. You can see that time frame, that 6-month time frame. It's connected those highs and lows. If we go to 3 months, let's see if it switches. It still doesn't. So it may need a little bit more confirmation to the upside. Same with ACLX. AMNU, all of these kind of stuck right in that middle of that trend, but working their way towards that upper momentum zone. CLBT. Again, remember that these are not fantastic market conditions. Be cautious in terms of the number of holdings that you've got. Tighten up the stop losses. Manage the portfolio effectively so that you're not stuck with any significant losers as and if the market continues to roll over to the downside. That'll do it for today's update. Everyone have a fantastic day today.